You're looking at a chart of gold on a 15-minute time frame, and I want to walk through yesterday's New York trade, okay, that I journaled up here. I want to walk through this particular trade and a few things that I want to go through, okay? Now, firstly, in my previous video, I taught you how to read structure and how to take advantage of the bullish order block, okay? So whenever you see a low and a high, and then you see a lower low, okay? Then you see that there's been a break in structure because we've now gone above the previous high, okay? And we've closed above there with displacement, right? This is a nice big candle. The up candle, okay, in that swing high is your bullish breaker, okay? And it's that candle there, nice thick up candle, okay? So if we just put a box around that, any pushback down into that zone is a buy. Now, I showed you how this, and I've already spoken about in that previous video the fact that order flow was bullish. Even on a higher time frame, for hourly, we have a similar pattern: low, high, lower, low, high, high, move down into the bullish order block is support. Even on the hourly chart, I think we saw this as well. Low, high, lower, low, higher, high. Okay. Now this one's obviously gone through, but I don't go lower than the 4 hourly chart to determine my directional bias. So let's go back on the 15-minute. So on the 15-minute chart, we have low, high, lower, low, higher, high before 9:30. Okay. The time to trade gold is at 9:30. Okay. So let's find the 9:30 candle. It's there. Now at 9:30, we are up high. Okay. So at 9:30, there's no entry there to go long. Okay. Your bias is bullish. Okay. Your bias is bullish until you reach your target, right? And that there is the Asia highs from the same day, right? So in New York, you got a bullish setup, low, high, lower, low, higher, high. On a high time frame, directionally, we are bullish, so you're only looking for longs. Here at 9:30, you don't have any entry to go long, okay? Let's look at 9:45, nothing. Let's look at the 10 a.m. candle. The 10 a.m. candle is a new hour, so you're going to expect some kind of reaction, some kind of movement. At 10 a.m., the market opens there, right there, where my cursor is at 2453.90, okay? Goes down into where? Into your bullish breaker, right? And then goes straight up where? Into the high of Asia. Perfect setup, single 15-minute candle, okay? So if you entered just as it came to the top of that box, let's put it just on top of the box, up to these highs, that's over 100 pips, okay? Could you get 50, 60 pips? You could have just targeted the high here. That's 90 pips, right? So you got to understand your bullish signatures and the times that you need to enter, okay? The time to trade gold, I've repeated it, is that 9:30 a.m. to 10 a.m., okay? That's when New York, in that time session, that's basically the time where, in my experience, New York makes the low or the high, okay? So that's your target, high of Asia, that's high of the day. We are bullish, higher time frame. So your job in that session is to identify an entry at a key support zone if you're bullish. We have marked out the key support zone, that is the bullish breaker. 9:30 candle is nowhere near there. So as soon as that bullish breaker has been identified by this move up was at 8:30, the 8:30 candle, okay? It's gone up there and closed. Immediately at 8:30, you know that, okay, my target's still intact, the high of the day still intact. That's where the liquidity resides. I'm bullish, so that's the high that I should be targeting. 8:30 candle could have gone up there and taken that, and 9:30 then could have been the short. That could have been a scenario, but 8:30 doesn't take out the high, chops around. 9:30 opens, there's no entry here at the highs. We need to be down to our support zone. We've already marked it out, it's a bullish breaker. So we're waiting, and the 10 a.m. candle comes down into the bullish breaker, provides an entry. That's the long, get the target, high of day, and we're done. You don't have to target the high of day if you don't want to. Just identify your setups at key levels, at key times. Target any high. You've got to target this high. That's 80 pips, right? You may not get the high, so you go with what's the easy target, okay? For me, I just worked out the easy target, which was the midpoint of a previous wick. So I also did not target the high of Asia, even though the market at 10 a.m. went up there, okay? Now, on an hourly chart, when we look at an hourly chart, you can see this is all before New York. We have our 3-bar pattern. You got a down candle, you got a candle that wicks into a low or some key level, fair value gap, and then you get complete engulfment of that structure, okay? That is a perfect 1 hour, what is a balanced price range, but I just call that a fake, right? That's a false breakout to the downside, okay? But it's that same 3-bar pattern, this one 1, 2, 3, 4 bars, but same pattern. You get a down candle, a wick down into some key level, and then engulfment. That's at 7 a.m. So the open of that candle, this is the 1 hourly chart, started at 7 a.m., closed at 8 a.m., okay? So right there at 8 a.m. is a perfect entry to go long. That's not where I entered. I entered in that time. I think it was somewhere maybe 8:30. Let me quickly look at the time. Yeah, 8:30 was my entry. I entered 5 lot at 8.21, and then another 2 lot at just before the open of the news, just about 10 seconds before the news was opening. Okay, so we had a news day which pushed this up. Okay, so that was a trade, and as I said, I just targeted a wick. Okay, you can see that wick here. Okay, so I just exited at the midpoint of that. That was the high of the Asia session, and we got that in that move up. Okay, and that was the entry into, anyone that was trading the 10 a.m. candle had a beautiful entry back into. It's even an entry, that zone is even a bullish breaker on an hourly chart. So that zone is very key. Right, on a 15-minute chart and the hourly chart, we have a low, high, lower low, higher high. Okay, that's the bullish breaker, and at 10 a.m. we've come into there and going back up, taking out the highs. Okay, very easy trade. You've just got to study the charts, learn the signatures, understand direction from a higher time frame perspective. Your buys, trade in alignment with your buys. Look for where liquidity resides. Where can you take that long trade off? What is the algorithm going to target? Okay, so I hope the video was useful. I might do a video later on today about where I think the market's going, but I just wanted to walk you through yesterday's New York trade. Okay, I want to talk with you in a future video.